Hello and welcome. Thank you all for joining us today. I am Omar Jordan, the CEO at Coviance, and as CEO and founder, I am relentless about providing credit unions the opportunity that foster the financial wellness of members and help communities thrive. And in support of that mission, I'm pleased to introduce you to someone that I get to call a friend, and I'm sure all of you feel the same way about the Honorable Rodney Hood, the 11th Chairman of the National Credit Union Administration. Mr. Hood, thanks for hopping on.
Thank you for having me. I'm delighted to join you.
So my intention with this setup today, Rodney, is to give people perspective beyond the legislation aspect of what happens on a daily basis. Kind of wanted to have a conversation with you to highlight the process, the people involved, the meaning, and most certainly celebrate the accomplishments that we as an industry have accumulated in recent years. So it'll be conversational, just have a good time, soft-hearted conversation, and that's the intent. So I hope you and the audience is ready for some fun while we're talking today.
I'm all ready to go. Let's buckle our seatbelts and move forward.
I love it. So the one thing I want to highlight, so the other day, about 4 days ago, I get on LinkedIn and I saw a post where the Alabama governor, Kay Ivory, issued a resolution naming you. Could you share with us what exactly did that encompass and what does it mean to you?
Well, it's always a touching moment when you have a governor of a state as large and as popular as Alabama reach out to you because of the work you've done promoting financial inclusion, promoting small business lending, promoting sustainable home ownership. The event that we took place or that took place with Governor Ivey came from a number of my trips over the years to Alabama. I've received a number of invitations from the Alabama League, from Senator Tuberville. A number of folks have wanted me to go to that state, and because it is such a big state, I think I've covered the vast percentage of Alabama with the message of credit unions being safe and strong, really making sure that they know that the 2 million members of credit unions have a strong insurance program, and also that those 100 credit unions that are there are looking after their needs by providing access to affordable products. So it was the culmination of years of coming there to visit, and she wanted me to know that they saw demonstrable changes as a result of NCUA working in collaboration with the state regulators there to really create a healthy credit union system. So I was honored to be with her, and that was just a week ago from today.
I keep thinking about your first 90 days in office. If you were to write a book about that chapter, give us your synopsis on what does that look like as you walk in, and here you are on the board of the NCUA?
Well, that's a really good question, what it looks like. And I think you wanted to know the chapter of the book or the title of the book. I would say, is this a dream? And I would say, is this a dream? Merely because I never thought I would see the day that I would become the chairman of the NCUA. Many of your listeners and many of those joining us today may recall that I was, in fact, vice chairman of NCUA from 2005 to 9. And then I went back to the private sector. So little did I know that I would come back and in so doing would be the first man of color or person of color to ever oversee a federal banking regulatory agency. So Omar, what that really meant was that since the founding of our country, we've
Yeah.
never had a person of color to oversee the FDIC, the OCC, the Federal Reserve, or NCUA. And I was very honored, one, with that opportunity, but I needed to do more than just relish in the fact that I had made that historical moment. I wanted to make sure that I was bringing a lot of my personal experiences and my shared experiences with me to NCUA, meaning the financial inclusion pieces that I talk about. I know what happens when communities of color don't have access to financial services providers. It leaves them vulnerable to predatory and payday lenders. So when I took the oath and when I was assembling my leadership team, I knew from those first few days the things that I wanted to make a difference with. In fact, Omar, as I began to assemble the team, I told them I have a time frame where my political appointment will run for about 5 years, we need to begin with the end in mind. That means that we need to immediately think about what are those things that we wish to do that are going to be transformative and impactful. And if you don't come in with that level of vision, then you're just sort of scrambling around. So 90 days it took assembling a team, working with our agency leaders and getting to know them. What are the things that they wanted to accomplish outside of our safety and soundness regulatory responsibilities? And then as we assembled the team, I believed in stakeholder engagement. So I spent time getting to know the leagues and going to the states, similar to Alabama. Omar, in that first 90 days, I knew that if I wanted to be effective, I needed to get out of Washington and go visit the different leagues. So I visited almost 50 states because that's how I ascertain the needs and that's how I know what we're doing at NCUA. My regulatory philosophy is regulation needs to be effective and not excessive. And I got to hear what that meant to folks when I visited with them. So that first 90 days was fact finding, building out the team, encouraging our staff members at NCUA, wanting to really equip them for success. You have to make sure that you've built a wonderful foundation internally so that they can all rally around your mission and rally around the things that you care about. And I know we're going to talk about a little bit of those things later regarding financial inclusion, affordable housing, and most importantly, the fintech office that we created. But those are all the things that I wanted to start out within the 90 days of just hitting the ground running.
Well, what you just highlighted is exactly what I want to go over throughout. So I'm going to dissect the entire paragraph and give it to you in a question format. So for the audience to really understand what drives you and what drives that entire mission. But before I get there, I'm really curious how it feels to be, again, you talked about a personal accomplishment, to be nominated by a United States president. That phone call must be a proud moment. It goes on the resume, I'm sure.
It is a proud moment, but I would encourage our listeners not to do what I did when I was first called by the White House in 2005. I was working for Wall Street company, for a Wall Street firm, and the White House called. And yes, I may have hung up the phone because I thought it was a joke because it said, "This is the White House calling for Rodney Hood."
Oh my
We've
God.
all had busy days, and in this day, you're thinking, oh, I don't have time for this. So they rang me back and said, hey, we really are calling. If you don't believe it, this is the number of the White House switchboard if you want to call us back. So I got through that assurance that they really were who they said they were. And I took the call and we talked about the opportunity. That was when I was joining in 2005. So a similar approach in 2018 when they called. And I didn't hang up the phone this time, Omar, but I listened. And what you and your listeners may not know, when the White House presented me with the opportunity, it wasn't to immediately return to NCUA. I don't know if you knew this, but I was offered the opportunity to head up CFPB. And I feel that that aligned with some of the things that I really wanted to do and the direction I wanted to head. And that's when we talked about my returning to the agency. Again, it's chairman of NCUA. So it was a proud moment for your listeners or folks who are viewing us today. It is a process that they don't just call you, but you do go through a very extensive background check, about 18 years. They're interviewing people in your life, your previous employers. They interview your neighbors. So they really are very diligent in just making sure that you are equipped for government service. So they do that, one, to make sure they're not looking to see if you've been angelic. They're not looking for perfection. They're just looking to see what things are there. But so that means I've gone through the background check. That means that you then have a confirmation hearing and you go through the process. And then normally within 6, 9 months to a year later, you're taking the oath of office. And I was happy to do that in April of 2019.
That's such a process. So in the previous statement you made, you talked about your passion and what drives you. And I heard you on a previous podcast talk about your background as a missionary in Africa. You lived in Zambia, Zimbabwe.
Yes.
What a beautiful country, by the way. And that experience must be beautiful and inspiring. How long were you there? And then most importantly, talk about how that impacted your mission in life as from a personal experience, right? To be in that environment, how do you feel that shaped what your vision is towards humanity and really serving the greater good?
Well, Omar, that's a really good question. I was there for several months, living there in Zambia and Zimbabwe, working with other missionaries, working with the faith-based community to really give hope and opportunities for the folks that live there. And what it did for me, gave me the desire to want to help people, to touch and transform lives in local communities. And while I'd already gone to college at UNC at Chapel Hill to study finance and accounting and political science, I knew at some point that I would go into the ministry. So it was a chance to do the short term missionary assignment, thinking that would be a precursor to going to seminary. And while I didn't quite feel that call following the trip, because in the movies, Omar, the people who have these calls, you are jostled out of your bed at 4 in the morning. And
Yeah,
then there's lightning and thunder. Then the next thing you know, that next movie cue, you're standing in a pulpit. Well, that didn't happen to me. So I just assumed that I wasn't wanted to be a priest. So I just said, well, I guess I'll go at plan B and I'll go into banking or financial services. So I did that, and all tongue in cheek. While I've worked in financial services for 30 years, it has
yeah,
always been with that mission and that purpose. So I mentioned how the trip, I wanted to make a difference and touch and transform lives. I have been able to do that, fortunately, for 30 years now because the banking and financial services that I've done, I've helped marginalized communities have access to affordable mortgages so that they
yeah.
can leave a legacy for their family. I've helped those minority entrepreneurs get access to capital to have sustainable businesses. So I've been able to, as the scriptures call us to do, I've been able to help the least among us by working diligently to provide financial services,
Right.
financial empowerment, and hope. So that's what drives me today. I know that when I get to work with credit unions and organizations like yours, and you're very mission and purpose driven,
Yep.
the purpose driven work of credit unions so aligns with my North Star. So that's why, if I'm passionate, it's because I feel that I can make a difference. And I am paid by the career choices that I've had, but I am particularly made for the calling that I have today.
I think about what you said in the past. I love hearing you talk about credit scoring and how a credit score can not just impact an individual, but impacts an entire family, impacts a village, and a really a culture that we could, that can be impacted by the way we credit score today. What do you feel helped shape number one your love for or your passion behind how we credit score and how we help, and how do you think we come out of that beyond what's beyond that credit score model for lending, right? I feel like that's a missing piece, and I love the technologies that are coming out today with AI and the ability to focus on the member score and versus an actual credit score.
You have given me a lot there to unpack, Omar. In fact, I don't think you and I have ever really had this conversation. So it's something that really does touch at the heart of what I believe. I believe that credit scoring has kept a number of people away from financial access and opportunity. And it's because of some of what goes into the black box. I saw this firsthand. And again, when I talk about being in the industry, seeing the good, the bad, and some of the things that need to be actively addressed, one such tool is that of credit scoring. I was once, when I was a young loan officer, I had examples, Omar, where I would have a minority and a non-minority come in to apply for a loan. They would have the same criteria, the same data. And for some reason, why would the minority candidate have a credit score that was 200 points lower than the non-minority candidate when everything on paper was equal?
Right.
What differentiated the minority from the non-minority borrower was where the minority borrower obtained credit.
Yeah.
The minority borrower did not have a Main Street or a Wall Street type of bank or credit union at that time in their community. They went to a payday lender, what we used to call like a
Yeah.
pawn shop lender or something like that. So that model immediately or erroneously assumed the worst in that borrower. So it's because of those types of scoring mechanisms that I recognize that more needs to be done around credit scoring. The reason I believe that scoring needs to be changed for a number of reasons. I talk about financial inclusion, the civil rights issue of our time. Well, you
Yeah.
know what? That means that without a credit score, how can you be financially included? Credit scores determine if you get to have a transaction account at a bank, whether it be a checking account or savings account. The credit score determines, in some instances, where does one get to live, because they
Mhm.
may not be able to get to live in that apartment or house of choice, and where you live determines where you educate a child. And the other piece is the credit score can also determine whether you get a job. So those are the three things that all hinge on credit scores, which is why I am delighted today that there are scoring mechanisms out there that are now looking at cash flow lending, that are looking at character lending, that are looking at some of those types of tools. I'll end with this. I recently, as I mentioned, my 50-state tour of credit unions, Omar, I just visited with some credit unions in Saratoga, New York. And
Yeah.
that was one credit union where I had a similar conversation. And you know what the CEO said to me? Where Mr. Hood, I have not used a credit score to make a loan at my credit union in 15 years. And
Huge.
his loan quality, asset quality is better than none. So it's phenomenal. So credit scoring, yes, it may have been indicative of the past, but there are other tools to date for all the things I hope that I've just enunciated for our crowd today.
It's so important, and it's such a topic. Everybody thinks about it, but a few acts upon it, and it's it takes an entire movement and trust, right, in that product. And so having success stories around that really helps something like this move forward. I'm a huge fan of this topic, specifically from a credit score perspective. It changes lives, the impact of it, and how it's being calculated. To your point, it's a black box. Um, so there's usually a hero and a villain in a book, and many people might think of regulators and technology would be at odds. And so you're clearly passionate about paving the way, so that when you advocate for fintechs, you're passionate about that collaboration between fintechs and credit unions. How do you feel, first 90 days in office to where we at now, the relationship between fintechs and credit unions? What's the progress?
Omar, I would say the progress has been transformative. We've made great progress. Remember, you asked me earlier about that first 90 days, and I mentioned coming in with the end in mind. I had just left a decade on Wall Street where I had learned about the powerful role that fintech can play in transforming financial services. What I did not see initially in coming into the credit union community at NCUA was this overwhelming desire to bring fintech to credit unions. And I recognize that if I want to do something that's going to be impactful, we need to make sure that credit unions are embracing financial technology, the tools that it takes around faster payments, data aggregation, using the data, but not just to sit on the data, but to not just sit on it, but to use it to anticipate the needs of our members. How do you really use data to anticipate loan needs that that borrower may need to have in the future? So I wanted to work diligently, and I did so by working with my fellow board members when we created the Office of Financial Technology and Access. NCUA, along with many of the other government regulators, we have our own Office of Innovation that is working with fintech companies such as yours and others to let the industry know it is perfectly all right to use these types of partnerships. I don't look at it as a luxury. I think that before the pandemic, many of us looked at fintech as a cute little luxury. I think, if anything, to date, it is now a strategic imperative. That is why I'm glad that we have a new director of financial technology and access. His name is Charles Weiss, and he is working to, again, provide guidance and direction. We at NCUA are embracing technology through also letting credit unions, Omar, know that it's perfectly acceptable for them to engage with digital assets, cryptocurrencies, and also the use of distributed ledgers technology. Those are all things that we want credit unions to use and avail themselves of as they compete and evolve in today's dynamic marketplace. So the technology office is up and running. By the way, Omar, it did take several years to find the right person. When
Yes.
we began looking for this person, I wanted to have a modicum of intentionality around having a person who could understand the policy implications of technology, who could also understand how does it work with credit unions and use cases. I could have had any number of folks, you all, who would have taken that role, but who
Yeah.
would have made it inward focus. This person, Charles Weiss, is now meeting externally. You're going to see NCUA doing things such as regulatory sandboxes, tech sprints, shark tanks. So there's a wonderful ecosystem out there, and I am just delighted that one of the things that I leave as I conclude my term is that the credit union system has a fintech director within the regulatory body, and that's going to really go out and far and beyond NCUA. It's going to really penetrate the system itself.
I love that. I've met Charles, wonderful gentleman, and I've reached out to him and I said, if there's anything we can do to collaborate together, happy to help. And he's been extremely responsive. And I think for the audience to know too, what you guys have done and led by you, Rodney, is a fintech monthly call. I remember me participating on one where we actually got on the call, did a demo of our product to the NCUA folks, including some auditors and people that are working on a daily basis with credit unions to give them perspective as to what we do. And I know you've done that for other fintechs in the industry that many credit unions leverage. So it was great. I don't think I've ever experienced that working with a legislative body or an administration, a government administration. It's really fun. I hope we get to see some of that maybe on even the CFPB side and or the FDIC side. I think it's so important that we bring visibility to that and collaborate together to better not only financial institutions, empower them, and also better our communities.
Omar, I couldn't agree with you more. And again, thank you for joining that call. And Omar, I started that FinTech discussion series well before we even hired Mr. Charles Weiss because I knew that many of our credit unions were already partnering with organizations like yours and a few others. I knew that they were already generating results, but what was that missing piece? That missing piece was that we at NCUA had no direct knowledge of the fintechs themselves, and do not want any of your listeners to think that we were inviting the fintechs in to micromanage and look at the business model. It was merely to continue learning. You all,
Yes.
the federal government, we are still learning about technology. We're still unpacking some of the great use cases that are there. And one of the things I did not want to have occur on my watch was to have a credit union, Omar, hear me talk passionately about financial technology, but then when the moment of truth occurs, the
Right.
moment of truth is when your credit union goes to the exam and someone from NCUA says, well, I've never heard of this fintech. I don't know what they are about. So we're just going to assume the worst. So no, my whole point is learning how is that fintech having a fidelity to consumer protection and consumer compliance. So when we meet with them, we are learning. But and to your point, there's a cross section of NCUA leadership on the fintech discussion calls because it's learning, and then that information cascades throughout the country so that these folks understand the fintechs and the partnership opportunities that they're working on. So I can't speak to whether the CFPB or FDIC will follow suit, but I thought that for me, it was the appropriate thing to do to make sure that it was a seamless experience between the fintech, the credit union, and NCUA when it comes to the examination side of the house.
You mentioned liquidity too in a couple of sentences. In 2022, we saw a tremendous amount of liquidity, on the balance sheets of credit unions in 2021. And in 2023, we saw that migration of liquidity and departure. And so putting yourself in credit union CEOs or team of executives, what are the things that you think they can do to help address that issue, to make sure they're still continuing to lend to their members to meet their financial needs?
Well, it's important to lend to the members to meet their financial needs. And of course, we're seeing a lot of headwinds today, Omar, in our society. I mean, we're seeing rising interest rate risk. We're seeing a number of inflationary pressures, the highest it's been in 40 years. And in spite of the headwinds, I am pleased to report that our credit unions still are posting some very strong results, as evidenced by one, the $2.2 trillion in assets that credit unions now have throughout the industry. A number that I'm really proud of is the 1.6 trillion in loans that are outstanding. So regarding liquidity, back to the root of your question, I wanted everyone to know that we are in a strong position economically with credit unions by way of capital, and capital can be deployed as a great buffer when times get tough. Liquidity, yes, we're seeing constraints, but what are we doing about it? We are encouraging our credit unions to, one, look at their loan and duration risk. How are they making sure there's not a mixed match of assets and liabilities on their balance sheets? While
Mhm.
I applaud that $1.6 trillion in outstanding loans that credit unions have made, I want them to go back and look at some of their pricing. Credit union leaders tend to lag the other banks and community institutions when it comes to rising rates. But what are we doing at NCUA? We're encouraging our credit unions to have contingency funding sources. We joined the FDIC, the OCC, and the Federal Reserve in
Right.
providing guidance on Federal Home Loan Bank borrowings, making sure you have a relationship with them, Federal
Yes.
Reserve Bank for our large institutions in the discount window. And then for smaller institutions, Omar, if you know this, we have our own central liquidity facility at NCUA where they can borrow credit unions. Those are typically credit unions at 250 million and under. They can borrow directly from NCUA. So there are a plethora of tools that are there. My advice to credit unions is test the tools. You don't want to go and test the line when it's too late, but you want to build those relationships now. So liquidity, we're seeing constraints, but nothing that's insurmountable that we can't overcome.
I love what you said about interest rates and credit unions. And yes, I get the passion behind keeping rates low, and there's no reason why we can't remain to have low interest rates, but not at the cost of giving members less experience than they would with maybe a fintech and a bank. And my personal experience with a credit union that I did business with a few years ago was buying my home. And I had the option of going through a lengthy process of buying this home, a mortgage that would have gone through maybe GSE, Fannie Mae, Freddie Mac, FHA loan, or a conventional portfolio loan. The interest rate would have been higher to be in the portfolio loan, but I would have gotten my mortgage a lot faster. And to me, as a member, I wanted the experience, and I was willing to pay a price for that. I pay a higher fee to have maybe a much bigger credit line than maybe with a smaller credit line. So there is a sweet spot, and I feel like, Rodney, the definition of member experience has changed, and members have changed that definition. And I want credit unions to or understand that member experience have been redefined by members, and it is faster service, more technology, and we understand as members that comes with costs, and we are okay paying a few basis points more than the usual. So thank you for pointing that out. I think it's a very important message. So it empowers fintechs to really come in and offer products to credit unions, and then for the credit union to really repackage those products, offer them to their members for the right price so that we can have access to them as members.
Omar, you could not be more spot on. I couldn't agree with you more wholeheartedly. It is about enhancing the member experience. One of the things with the fintechs that they're doing, I'm seeing fintechs that are helping with the appraisal piece. I'm seeing fintechs help with digital signatures. I'm seeing all the things that make for a seamless experience. I also would just note that with the fintech office that we've had, Omar, we did a new fintech rule not too long ago with my fellow board members where our fintechs and QSOs, they can now originate loans that credit unions have. So that means fintech slash QSO originates the loan, and then our credit unions now can buy the loan participations or eligible
Yeah.
loan obligations. So that's another way of bringing more liquidity
Yeah.
into the system, and it's another way of balancing out your balance sheets. It's also a good tool for balance sheet management. So again, the tools that fintech can bring are too numerous for us to even discuss in the call today. But again, credit unions have a fighting chance because in using them, it's a force multiplier, and it also helps them almost have the same access that Wall Street has in terms of reaching their customers. And the one thing that credit unions do, I don't need to tell you, you're a proud credit union member, is the trust. It helps that credit union build a deeper degree of trust because they have knowledge and insights about the member through their technology.
100%. So in the previous question, you mentioned working with co-chairs or your fellow board members at the NCUA. Do you, just for perspective, do you and now Chairman Todd Harper and Vice Chair Kyle collaborate together on a daily basis? How does that work? How often do you guys call each other and say, let's collaborate on this?
Never. We're not allowed to do that. No, we're not allowed to. In fact, you're really getting into what I would call the palace intrigue, Omar.
Yeah.
What many folks may not recognize, unless we are going to have the conversation now, I only get a chance to talk to Chairman Harper and Vice Chairman Hauptman at the board meetings because of what we call the Sunshine Act. That's an openness in government rule.
Okay.
NCUA is one of the smaller government agencies in Washington. We have a 3-member board. If I were to go scurrying into the chairman's office or the vice chairman office, that is a quorum. That means the perception is that we are moving policy. We're acting sort of covertly. So the Sunshine Act is to make sure that everything is open and transparent. So if I do see the vice chairman or chairman, I can ask them about the weather. How was your vacation? But if we ever want to meet with each other, we typically will have a lawyer present to make sure we are deviating. We're not deviating from weather and sporting events to policy matters. So what we do, if we want to get our points across, each board member of NCUA has a chief of staff or a senior policy advisor. They are the ones that work strategically with the other offices to carry out the principal's wishes and things of that nature. So it's people such as Sarah Bang and Catherine Galicia and Linwood Brooks. They will confer with each other because they're not bound by the Sunshine Act. So I see my board members once a month or from the hallway. And again, it's pretty, hey, how was your evening? Okay, have a good evening again. Bye.
I don't think I ever knew that. And I don't know how many people actually knew that. That's a really cool perspective on it. Thanks for enlightening us. You mentioned chief of staff. In every meeting that I see you in the hallways at conferences, I always see my dear friend, Mr. Linwood Brooks, standing by your side. And just the note you recently published to celebrate his time at the NCUA brought tremendous joy for me just reading that. And I know how much Linwood loved serving this industry and loves it still. I've never met such a passionate team, you and him and the team you've assembled behind the scenes. And sometimes for me, Rodney, people come and congratulate me on the success that Coviance has had. But I always have to remind them that it wasn't me that's doing all the work. There's a great team of people behind me backing me up. And I'm sure the same for you day in and out. So how vital is having the right team around you in a role like this?
It is critically important to have the right team behind you, with you, alongside you. I mentioned earlier, Omar, in that first 90 days, the most important thing is building out your team. I can't do any external facing activities if I don't have the internal team that really has the foundation in place. I had a wonderful leader in Linwood Brooks. Linwood understood the importance of being that collaborator. He understood the importance of industry relations and engagement. Linwood would go to events, whether it be a conference or a town hall. He would hear the questions that were posed to me. He would immediately go to that person that asked the question if it required a follow-up to make sure that he had their contact information. He would then share that information with staff to say, this is an issue that's brewing. Can we please address this? So he really had what I would call that member-centric vision. He, and much like myself, we never lose sight of the fact that we are a self-funded agency. We are to really be engaged with our members. They're paying us. Again, our $340 million budget comes from credit unions. So he wanted to make sure that they were getting a return on that investment. And that was by having accessibility and the ability to reach us. So Linwood Brooks, but Behind the scenes, I also had, when I was chairman, I had Giselle Roget, who was a deputy chief of staff. I had a communications officer, Evan Berry. I had Mike Senecor, who was one of our liaisons to legislative affairs. So it does take a really good team
Yep.
to really get things done. As you know, Linwood will be leaving us soon to go to the Federal Home Loan Bank of Dallas. And with that being said, he's going to carry that same vision and fervor because Federal Home Loan Bank system, Omar, is just like credit unions. They are cooperatives. So
Yep.
they are member service, member driven. So he'll carry that same penchant for making a difference as he is serving and heading up their government relations. But no, he was a good person, but we worked well together. And again, to all of you who are listening, build a team. If you do not have the right people around you, it could really sink a lot of your aspirations, no matter how noble they are. And if you are in a situation that required talent, just make sure that you are picking the right people. I mean, picking the right staff is almost like picking a soulmate.
100%. I couldn't agree with you more. I couldn't be here if it wasn't for my team, and our company wouldn't have the success if it wasn't for the team. And having a diverse team of not just by color of skin, but by background experiences, and all of that matters as well. We have a Q&A session coming up, but before that, I wanted to sort of ask you a couple of personal questions and see what comes out of it. So I'm curious, coffee or tea? What's your favorite drink, or none?
No, in fact, if you've seen me with my little mug here in the screen, I am a tea drinker. I don't know if it's because of just spending a little too much time across the pond with friends in England, but I love tea, but would
Yeah,
not refuse an espresso if it's in front of me.
yeah. So when you're not at work, Rodney, what do you do on the weekend? What's fun? What's a hobby?
I love reading. I love literature. I love playing tennis. I now am begrudgingly playing pickleball because all of my tennis friends are saying that they like pickleball better. So I love athletes. I love athletics. I ride the Peloton as often as I can.
Oh,
As you
wow.
know, I embarked upon that 50-state tour of the states with
Yeah.
our credit union. So I love walking. The first thing I do when I'm in a different city is I get up around 5:30 or 6. I walk around the downtown, and
Yeah.
especially with credit unions, my meetings tend to be in state capitals. Nothing pleases me more than ascending the stairs of a state capitol and peering through the windows, and then I'll get back and maybe go to the gym. But I just love relaxing on the weekends. And as many of you know, I am pretty type A. I believe in results. I believe in getting
Yeah.
things done, but I also believe in balance. And just what I encourage our team and all of the folks, work-life balance. So the weekends, of course, I stay a little bit tethered to the industry and reading and things of that nature. But Omar, when you don't see me at work or conferences, it's tennis, pickleball, Peloton, reading anything I can get my hands on. I tend to love a lot of the old English writers like Agatha Christie. And I love P.G. Woodhouse and some of
Wow.
those types of things. But as a financial regulator, I also make time for the Journal and the Financial Times.
That's incredible. I did not know that. Tennis is a tough sport, by the way. That's a hard workout. So kudos to you for doing that. You're an inspiration to a lot of future leaders, including myself. Who inspires you? What's someone that really influences you? Who do you look up to?
You know what? Well, my parents are now deceased. I sadly lost them 2 or 3 years after I graduated from college. Mother died 3 years after I graduated, and dad died a year later than that. But the fact that I had these wonderful parents who reared me in Charlotte, North Carolina, only child, who reared me just to strive for the best, to pursue academics, to pursue the passions that I have in life, to be well rounded, to teach me the thing that they taught me most importantly was just kindness and humility. They wanted me to be able to be in the room, whether it would be with the president of the company or someone who perhaps was their first day and maybe not in such an exalted of a role. And they wanted to train me. And I think I've tried to live this. You would never know or should never know the level of the person to whom I'm speaking because I'm going to be consistent, whether it's with English nobility or maybe someone who is working at the parking garage. At the end of the day, is to treat people with kindness, humility, And the one thing that I think my parents instilled was to do that consistently.
Yep.
So they gave me the wonderful work ethic that I have today. And while they didn't get to see me do a lot of the things that you and I have talked about today. They did see me begin those early days of my career, and I was beginning to get some attention then. But I think the vision that they gave me, the being tethered to faith, to having a purpose-driven life, is
Yeah.
something that I hold them responsible for.
Well, that means a lot. Thanks for sharing that personal touch with us. I also heard that you like opera music. Is that true?
Yes, that is true. As interesting as it is to believe, yes, those parents that I was mentioning that have now deceased, been deceased, that are now deceased, they did take me to see opera. I saw Carmen when I was 13,
Yeah.
Bizet's Carmen, which is a very rhythmical, very moving, stirring opera, a lot of pageantry and
Okay.
intrigue in it. And so imagine 13 years, you're just mesmerized. And what I tell folks, when you're a young child at that age, a lot of the opera the music from the cartoon. So Bugs
Yes.
Bunny and some of those, they're using opera. So for the last 40 plus years, I have been a fan of opera. I used to write about opera for the federal government. Omar, you don't know this, but I was a volunteer for the National Endowment for the Arts, where
Wow.
I would help them determine who should get opera funding. They would fly me different weekends. This was when I was a really young person in financial services. Every other week, they would fly me either to your city in Des Moines, or they would fly me to Milwaukee. I must have toured 30 states listening to the opera, writing about the opera performance,
Oh my.
interviewing the board of directors, interviewing the audience. It was almost like doing a little mini credit union exam. I was doing that, though, for the opera companies. And then the federal government would determine who receives funding from the NEA. So I was what they called the layperson. I mean, I'm not a professional musician. I did play trumpet and piano as a child, but I was representing Joe Public for the NEA.
That's incredible. Incredible. I love it. Well, let's take some audience question and I think we'll just go to a live Q&A as we're nearing our hour here. So maybe jump into our first question if you're ready for that, Rodney.
Mhm.
Uh, Let me just bring in the question here onto my screen. What role do you see credit unions playing within the mortgage, let's add home equity space over the next 5 years as we see rates go up and down?
Well, I think the one thing about credit unions and mortgage lending over the next 5 years, it is going to continue to be a core product within credit unions. The one thing when I talk to folks today is that they got that first mortgage through a credit union. Credit unions have always been that port in the storm, and I'm glad to know that credit unions are partnering with not some of the nonprofit groups. In fact, one such nonprofit is the group that I chair the board of, which is NeighborWorks America, which provides individuals with counseling and home buyer education, such that when that person then comes to a credit union, they have already been sort of pre-qualified in terms of the criteria. So credit unions have differentiated themselves from the other mortgage lenders because of service,
Yeah.
because of price, and because of the ability for that credit union customer or member to not only have the mortgage, but they can tie that to other products and services. I'm also proud that many of our credit unions who don't use the secondary market as much, they use their portfolio when necessary. And that is something I don't see from a lot of other lenders. And one such example is when I served as the NCUA's liaison to the Firefighters Credit Union League. So that means that I was that person who was able to talk to the firefighter credit unions about what are some of the needs and some of the things that they needed access to. Many of the firefighters, when they live in a Boston or a San Francisco or New York, they have to live in that community where they are working. It's
Yeah.
expensive to buy a home. Well, what credit unions that are doing with mortgage lending, they're doing 35 and 40-year mortgage amortizations to
Right.
really provide credit. So that is one such thing. I see credit unions thriving in this space, being innovative and imaginative. Mortgage lending has long been core within credit unions, and I continue to see that in the days to come. And I think credit unions are even going to be able to do it even with more agility as more of the fintech tools are made readily available, as more of the folks around data aggregation come. And again, when I talk about not just meeting the need, but anticipating the need. And that's where the home equity piece would come in. If you see that someone has amassed a bit of equity and you see that they're perhaps borrowing on a credit card or something like that,
Right.
because of technology, that credit union director can maybe do some type of borrower solicitation to say, would you like to tap your equity line, which may come at a lower price than the credit card or the other borrowing. So there are just a plethora of things that I think credit unions will be able to do in the next 3 to 5 years related to mortgage lending, but it's largely going to be catalyzed by fintech.
I couldn't agree more. And I think I saw a documentary a while back about the last recession we had in 2009. And if it wasn't for the focus of community lending, credit unions, and some community banks, we would have been in much worse shape as a country. And I think it's the same thing as maybe unfolding in this time. While it's not necessarily a recession as we had back in 2009, 2007, it is credit unions that constantly step up and save our community once again from high interest rates and consolidate our debt and improve our homes to increase the value of our homes.
Omar, you could not be more accurate and spot on again. This has been such a great conversation. Credit unions, again, are that port in the storm. Think about it. Credit unions were created following the Depression when hardworking men and women from the automobile plants and manufacturing facilities, they could not get Main Street financing. So what did
Yep.
they do? Rather than lament the fact that they couldn't get traditional financing, they galvanized, pulled together their resources to create today's system of cooperative credit in America. So because of that adversity, they've always been there for their members. You're right. Credit unions and community lending institutions were there during the Great Recession. We saw a lot of that during the early days of the pandemic. Credit unions kept
Yeah.
their doors open. They met the needs of their member. Omar, many of my fellow peers in the banking industry, because I was chairman then, we were sending letters to credit unions telling them that they needed to do, not credits, banks and credit unions for that matter, talking about loan modifications,
Yes.
debt forgiveness, troubled debt restructurings. I want you to know, and I shared this with other banks, I said, well, we're going to join you in that letter writing, but credit unions are not waiting for their prudential regulator to tell them to do these things. Credit unions do these types of things on their own volition because it's about service. It's about really demonstrating people helping people.
I love that. Let's take the next question here coming up. Well, we talked about this a little bit, Rodney. What do you feel beyond maybe what we talked about on this? What are the best ways to increase liquidity?
Well, some of the ways that, other than what we've discussed, and I've already discussed your Federal Home Loan Bank, Federal Reserve Bank, and if you're a smaller credit union, the Central Liquidity Facility. Other things would be the loan participation rule that we just voted on as a board. I would also say perhaps looking at asset securitizations. We did just have recently in our industry the largest asset securitization in our country's history for a credit union. I would also think in some instances, subordinated debt, secondary capital. We had a rulemaking when I was at the chairmanship level when we basically used to have only low income designated credit unions would have access to subordinated debt or secondary capital. Well, now any credit union above 500 million, which is considered complex, can use that particular tool. So those are some of the tools that are available. We had the Capital Markets Summit, if you recall, Omar, where you joined me there on Wall Street talking
Yep.
about all these types of tools. So I would love to make that video available if you'd like to share it with your folks following the call today.
I would love that. I was invited. Yes. And I also love what you did with the market symposium and talking, inviting some experts around liquidity and hearing that. So please share with me after the fact any of that, and I'll make sure the audience gets to it. And then, for me, we have a call coming up here, another webinar that we're hosting with a consultant from the Darling Consultant Group, and we're gonna segment it for banks and credit unions. So stay tuned for that. We're gonna make sure we share that with the audience, in an email, and it's gonna focus on liquidity. And the one thing that I keep hearing about is, lending pledgeable type loans for example, home equity and mortgages. Those are pledgeable assets that you can actually bring liquidity as you lend that out to your members, and certainly there's ways around it. And I think loan to share ratio is misconstrued as a liquidity challenge, while liquidity is a much bigger picture than just loan to share ratio. And
You're absolutely right. It's much more holistic than that. That's just one component. That's why, Omar, we have a liquidity team within NCR that looks at these issues throughout the industry. And you're right, loan to share is just one variable. But availing yourselves of the other tools that I mentioned, you know what? This is so exciting. That's why I got choked up a moment ago. I get excited talking about this issue. Another thing that symposium that we did, Omar, you may recall, and this was really clever that a group did out of Texas, sell leasebacks. A lot of credit unions are having this recognition that they don't need that whole headquarters building in today's hybrid work environment. So some institutions are selling their institutions and doing the lease back. So that's another type of opportunity around enhancing liquidity. So there are more than enough tools out there today. And that's why, again, I'm glad that we had that capital market symposium on Wall Street to let credit unions know these are tools that are there for you to use. And if anything, it should let folks know that we're not going to shy away from them, but we want you to use them. But make sure that you're mindful of the risk and that you have your boards imprimatur and that you have your procedures in place. So the main thing is if you are going to use these tools, make sure your policies give you that authority.
I remember that skit specifically, leasebacks. I think it was April on stage, the CEO from Michigan State that actually highlighted what she's done and doing. So for credit unions looking into that, I'm sure, again, April would love to collaborate with you on how they've accomplished that. Do we have any other questions, team, that we can put on the screen? How about we go to the next question? All right, let's see here. What about the mortgage industry with many homeowners having such a low interest rate that we can't compete with? So I think thinking about, I guess, where do you see rates? While you really don't know and predict, how do you think credit unions can compete in this environment with low interest rates?
Well, there are some low rates now. Well, the high rates, I know the question is saying that with such low rates. Well, the thing is, I gave a talk yesterday at a business symposium, and even in this rising interest rate environment that we find ourselves in, the credit union mortgage rates are still anywhere from 100 to 130 basis points lower than the other financial services providers. And I tell folks, why is that? I tell them because credit unions are not-for-profit cooperatives. So because they can share some of their results and earnings with the members, they will have lower rates. So I still think credit unions can be that port in the storm. They can still garner share. I think the main thing is, Omar, is that the trusted relationships, that trust that comes with the credit unions. Another thing that I would say, and there was a study that just crossed my desk recently, when we talk about increasing home ownership in communities of color, Black, Hispanic, tribal, the minority community is not nearly as interest rate sensitive as the majority population. What happens in minority communities, there is just this quest for home ownership because it's the fundamental building block of asset building in marginalized communities. So while others may balk at 7, 8, 8.5% interest, minority communities, once they get that qualification, they recognize that they are paving the way for financial stability with the family members. And also there's this recognition that rates will perhaps go down at some point and there could be the refinance. But studies have proven that minority communities are not nearly as mortgage interest rate sensitive because of just the pride and joy. And again, it's that fundamental building block of asset building.
Well, I'll add to that from my perspective too, as an entrepreneur who's driven by technology. To that question is, how do you separate yourselves from the competition in this environment? Because the volume has dropped dramatically. Everybody's fighting for that borrower that wants that mortgage or refinance. And so, what is your member experience? What is your fintech technology partner that you're working with to allow you to extend an exceptional member experience? Because to some degree, folks that have excellent scores that you want to maybe have on your balance sheet beyond serving the underserved, those type of borrowers want that experience and are willing to pay for it too. And so on top of what you just answered, Rodney, I'd say, revisit your fintech stack. What's it look like? What is your member experience? And then what's your loan to value threshold? Are you restricting, are your members going somewhere else because you only allow 80% loan to value, right? And so what things can you do to increase that loan to value allowance so that you're not losing members to other financial institutions?
I think that makes a lot of sense. And I'm going to use a word that I don't hear as often in the credit union system as I'd like, and that is cross sell. I
Yeah.
hope that credit unions can really, as they look at their balance sheets and look at member engagement, are they looking at that mortgage borrower or that auto loan borrower who only has that one loan? Are they looking at ways to build greater opportunities around depository services? Maybe if they're doing wealth management, a lot of credit unions are doing uh, retirement planning and helping with equities and things of that nature. So making sure that they are finding ways to go deeper in that relationship with the member as opposed to them just having that one product. As we've already discussed, credit unions can still price their loans appropriately and still compete with, I would say, the banks and other institutions. But are they going deeper in that relationship with the member? And again, data and analytics can help them look at opportunities to really capture, I would say, more wallet share of the members. And again, that tethers those individuals to the credit union system, and it makes for just a more robust, trusted relationship.
Yeah. There's a question I want to put forward, and I know we're a little bit here on time. So if we go over by a minute or two, forgive us, audience. I think one of the questions that came up, and I want to highlight on the next question, is diversity. And I know that is a hot topic for you, and it is for me too, being an immigrant into this industry that really has accepted me. And so, team, if we can put the question up on the screen related to diversity, how do you ensure that the future credit union leadership becomes more diverse, and that African Americans, and not just African Americans, are not shut out of high-ranking roles in the C-suite?
That's a really good question. And again, for me, as the first man of color to ever oversee a banking regulatory agency, it's a question that I take very seriously. We're going to have to be role models. As I tell folks when I meet with some of the African American interns, or for that matter, any of the minority interns that we bring aboard for during the summer, I say, yes, I was the first, but maybe I'm looking to date now at the second or third or fourth. We have to see it to become it. I think there needs to be more intentionality. Are we creating opportunities around training and recruitment? One of the McKinsey studies I read is that companies and organizations do a yeoman's job of bringing in minorities, but within the first 3 to 4 years, those individuals leave the companies. And why is that? It's because you invited them in, but there was no training around, not training, but there was no way of making those individuals feel inclusive or included. There was not an opportunity for them to be authentic. So I think that the industry needs to be very intentional about developing minority talent, cultivating minority talent, holding C-suite leaders to date accountable if they're not able to make the commitment to diversity. And I'm not talking about checking a box, but I'm talking about, are there mentoring opportunities? Are there employee resource groups that really get people together to share their collective experience in a professional setting? I think very broadly about diversity, equity, and inclusion. So of course, I'm thinking about African American and minorities, but I also think about tribal communities, indigenous. I'm thinking about disabled, differently abled. I'm thinking about justice involved. These are the individuals, of which there are 65 million in America, who have had some engagement with the criminal justice system, but yet they've paid their debt to society, and yet we have not been able to hire them. So we just created a new second chance or a fair hiring initiative at the agency. But the disabled piece, we at NCUA are recruiting at Gallaudet University, which is a college for the deaf and hard of hearing outside of DC. So we're bringing those individuals on. So credit unions, you may soon have examiners who will have sign language interpreters or using closed captioning. So we are, again, casting a wide net. We've opened the aperture deeper when it comes to looking broadly at diversity, equity, and inclusion. But again, it needs to be, leaders today need to be intentional. We need to make sure that we are building a pipeline.
Yep.
I still find it a little bizarre, Omar. In the 30 years that I've worked in finance, I still, in some instances, can go to conferences where I'm the only person of color in a room. And I know we've been trying to address this issue, but I will say today, I think there is more movement afoot. I think with the DEI initiatives to date, that really does seem to be permeating our culture. We're seeing a lot more movement. Credit unions, I will give them credit. I would say that credit unions, when you look at the percentages of women as CEOs of credit unions, as
Yeah.
minorities, credit unions do tend to lead the other financial services providers when it comes to diversity in the C-suite. And I want to see more of that. And I think, again, it goes back to the intentionality. But by the way, Omar, when I talk about what the industry needs to be doing, I want our agency to do it as well. So that's why we've needed to be intentional. 50% of our leadership is diverse in the C-suite in terms of women.
Wow.
We're making inroads when it comes to other underrepresented groups. And again, it needs to be a focus. By the way, you're mentioning DEI. At NCUA, we're going to be hosting our DEI Summit next November 1st and 2nd in Washington, D.C., when we will unpack a number of issues, just as what you've asked me to do. But I hope I've answered the question about intentionality, recruiting, pipeline, and mentoring.
Well, that was an incredible 1 hour for me, Rodney. Thank you so much for being here. Thank you to the audience. And I saw a comment asking us to make this available online, and it will be. It will live on our website and possibly YouTube. But make sure you reach out to me after the fact. I'll direct you to where it's going to live. Additionally, liquidity is a hot topic, as we talked about today. And so we have two additional webinars and interviews that we're going to be hosting in the next 45 days related to liquidity for banks and credit unions, separate conversations. And so tune in and look for that. In the meantime, Rodney, I am so grateful for your presence, for your, for being so humble to talk to, here I am talking to the chairman or the board at the NCUA, from Silicon Valley, Iowa, Des Moines, Iowa, as we call it. So thank you for hanging on and appreciate you so much.
Well, I appreciate you, your friendship, your vision, and I have been delighted with this time that we've had together. And I certainly hope that we can do this again soon. So thank you. I enjoyed it immensely.
All right. We'll see you at the next conference, I hope.
Yes, indeed.
All right. Bye, everyone. Thank you for joining, and we'll be in touch soon.